Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. How's everyone doing today? Good afternoon, Davey. I did not know that it's National Tequila Day. That would sure help right about now. Yeah, it's been still working through. It took me a lot longer than I thought to do the weekly sector ETF overview. Still really struggling. The rendering took like triple the time on this makeshift solution. Still working on getting a proper streaming and rendering setup done. Again, good evening, Anissa. Good evening, or good day, Mickey78. So we still got to get through our prep for this week. So if you want to see my thoughts on the sector overview, please tune in afterwards. Hopefully all the processing on YouTube will be done and I can set it to go live. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please come back, leave some comments after the video is over, and like it, please. All right. Okay, hope everyone is having a great weekend so far. Interesting place where we are in the markets. Remember, let me get up my everything here. Economic calendar. Let me just refresh everything. Economic calendar, we did review on Friday, but we'll do it again today for all the people who didn't tune on Friday. Tomorrow, we have the Dallas Fed Manufacturing Index. Just see if it's still in contraction territory, and Chicago Fed National Activity Index. We'll see if that drops down even more, but not much going on tomorrow in terms of news or economic releases. On Tuesday, we have the house price index to see if that starts dropping. The year over year, month over month. But the bigger thing is going to be consumer confidence coming in at 9 a.m. And new home sales will probably be down. But then we got to see if the Fed manufacturing index stays in contraction or bounces out of it. And if the Fed services index, the Richmond Fed service index, go in contraction. If that goes into contraction, remember we had those flash numbers from Friday. Services missed big and went into contraction, so that would be even more signs we are going into a recession. And then at 9:30, Dallas Fed Services Index was in contraction last time. We're going to have to see if that pops out of it or stays in there. That could potentially, we could get some market moving stuff off all those things. Good afternoon, George. Tom, I'm not even going to keep responding to that because the market now only does not always go up. And maybe you're just trolling me. Bottomed at SPY at 365. And I disagree. Eventually we'll get all-time highs coming. I agree eventually. It's just timing. So, but again, it's not really helpful. Yeah, at least you said you think we bottomed. So if we break below 365, I guess we're not at a bottom yet. And I don't have a long-term buy signal yet. All right, let's keep going with this. July 27th, Wednesday, is another big day. We have durable goods and retail inventories, pending home sales minor. For all the crude traders, it's crude Wednesday. But then the big thing is not necessarily the interest rate decision. I think 75 is baked in. I guess they could shock with 100, but I don't see that happening. The big thing is the press conference. What's going to happen on the press conference, as I talked about, that's the big thing. Unless they come out with a shocking thing, either they do 50 basis points or 100 basis points. One would surprise with 50 basis points would be more bullish because they'd already, all right, they have to ease back already. 75 would be in line. 100 would be overdone by a lot of people's books, especially with the numbers that have come out in the last week. But what's really going to be interesting is how they guide for the future hikes or pauses or everything else, because remember, there is no meeting in August. The next one is in September. So please keep that in mind. Thursday morning, we got GDP advanced numbers for second quarter, and it's forecast at 0.4. Remember, the Atlanta Fed Now numbers have been coming out in negatives. So it'll be interesting to see if this drops to negative. Because remember, prior was 1.6 for the prior quarter. And now if this comes, and these are the advanced numbers for Q2, which get a couple revisions, but if that comes in negative, we could then, with the official numbers, be getting back-to-back negative quarters of growth. Continuing jobless claims gave you that number to pay attention to, and we'll review that. It's in the 1,400 range. Core PCE and GDP price index, things that the Fed used to stress they watched highly. Prior coming in at 5.2, forecast coming in at 4.5. So we're going to have to see if that comes in line, which would be a drop, or if that drops even more, which would give them maybe more ammo that their inflation fighting is working. GDP price index is forecast to come in slightly better, but we're going to have to see that because that's still incredibly high. And you have initial jobless claims. Friday, again, we got the core PCE price index and the PCE price index and personal income and personal spending. So those are going to be also moving the market, and that's before the open. And then we have consumer sentiment, which is major. Remember, last week popped up a bit, but now we're going to get the final number for July. So that's going to get very interesting, and that's potentially market moving, especially with the inflation expectations. Hello, Wizit 661. Remember on Friday, let's see if this comes in. Yep. Pretty big pullback, Meta and Facebook. Decent in Amazon and decent in Microsoft. Alpha held up better. But pretty much tech got hit pretty hard and started the pullback rollover move. Tesla held up still, but we're going to have to see if that keeps going. Elon keeps making more and more news cycles with all his shenanigans. And the FedWatch tool still 80% of that 75 basis point, only 20% that there's the 100 basis point. So I really think this is baked in for good. And I'll have to look at that. It probably won't pop up, or nope, it won't pop up right now. So what I am keeping a major eye on is we are topping cycles on the S&P, on the weekly and the daily has started rolling over. Also in the weekly, we are in the rotation zone where we watch for a rollover. This is a weekly rotation zone with cycles at the top. Also daily, cycles at the top coming out of overbought condition just barely. Now, we start breaking below Friday's low. Slight bearish mode, and why only slight? Because we still have the major resistance becoming support. So major resistance area right in here, and then the breakout here and retested with this key low and this key low becoming support with the rising rotation zone. So that's why it would just be minor bearish, because you don't want to get overly, at least I don't want to get overly bearish into a key support level. Where do I start getting more bearish? We start dropping on a closing basis below the daily rotation zone. And before this we have really a primary and a secondary support ledge. I'd put this one as this is the secondary. This is the primary area. Let me see if I can fine tune that primary. Is that off? That's based off the 4 hour right there. Those are pretty decent levels right there. So this is the big support zone based off just pure price action. We start breaking below about 39.06, even 3900. Then I'm watching where we close, and if we close below 38.90, then I'm shifting to more bearish mode going into, at least if we do that within the first couple of days, going into the Fed meeting. What tips me significantly bearish is not until we start getting down on a closing basis below 37.81, but there will be downside plays before then. But what gets me major bearish is below 37.81. That does not mean you can't ride things down to those levels, but that's what I'm watching, especially with the cycles coming in, because there's lots of key support areas in here. And we have held up this flag pattern pretty well. You see it technically, if you were to put this on a weekly basis, if we were to put this on a weekly basis, we have, you can see that really nice. So in the context of a pretty significant downtrend, this is a very interesting flag pattern. But you have to break below the bottom of this channel to confirm the flag pattern. And that's roughly close to some areas I was talking about where I get really bearish. So until that happens, it could just be another pullback within a flag pattern. So that's why I can't tip majorly bearish just yet. Good afternoon, Sashi. I can get minorly bearish, especially we get below that daily rotation zone. To the upside, remember on Friday, we came up here, hitting the 40-15 harmonic and then pulling back nicely. With that, I'm just going to update these minor harmonics. So if we do turn around overnight and tomorrow, I can't, again, get real bullish until we get back above 39.95. Everything else would just be still in this range. All right, above 39.95, I then start playing for this 4,015, 4,016. Minor 4,028. It's actually more significant because we have a cluster right there about 4,428, then 439. And those are the levels to the upside. For the breakdown plays with the Sunday markets, if we start getting some momentum below 39.50, you see that was the bottom of the 4-hour rotation zone. Then I'm playing back to this key support 39.28 and then the 39.05 levels on the breakdown play. Not for me, it wasn't. The long-term bottom's not in for me. And when I say long-term, that's where you really start saying, okay, I can go into positions for months at a time and just manage stops. Where I'm not at a long-term bottom at all. There's still more pain ahead in this, and I don't have a long-term bottoming signal just yet. So this is just a bear market rally so far. Nasdaq, you see also coming off that minor harmonic. We now have to change this to the reverse harmonic since this was lower than this last swing low. And this pulling back, holding the 4-hour rotation zone also. Let's get to the next major targets here. Let's pull off these minor ones. All right, pop above the channel, but then close back in it. Same story with this. Major areas I'm watching. This key emotional close. We have the 50-day exponential. We have the rising rotation zone, 12,260. That's my first pullback level. We get below that, I'm really back to about 12,150. And then I start tipping more bearish on a close below 12,075. If we close below there, then I'm starting to watch for the key pullback levels to the bottom of the channel. And overall, on a closing basis below 11,686, I get major bearish because not only have we closed below the channel, we've closed below the 62.5. Fed's not U-turning this meeting. There's no way they're U-turning this meeting. Not with inflation still running in the 8 to 9%. They can't stop already. They completely destroyed our current. The markets would love it, but for the short term, but inflation would keep running hot and we'd be doing a complete replay of the 70s. And inflation hasn't even pulled back. They can't even start saying we're starting to ease up until they start getting year-over-year inflation numbers at least below 4% with a downward trajectory. So that's what I'm watching overnight. Bouncing off here. So if we start breaking below 12,350, then I'll go 12,276, and then I'll go back to this 12,156 area. That's it. To the upside, minor, if we start breaking above, see, we have this overhead resistance. So even on a rally, 12,530 is still a potential another rollover play. Okay? 12,530 is still another potential rollover play. So I can't get overly bullish until we get above. 12,526 is another rollover play. Once we get above there, 12,581, and then I start getting more bullish for a run. Minor would be 12,742. Major area would be this 12,800. 12,800, 12,780 to 12,800. Dow, we don't really have to focus on that this much, but my major pullback level is 31.5. And if we if we get a close below about 31,360, I'll be in minor bullish and major bullish if we start getting back below this key area. You could also put up your harmonics about 30,650. To the upside, I'm still, if we break above this area about 32,000 again, then I'll be targeting. Minor will be about 32.2, major will be 32,345. Russell, key pullback area is about 1772 to about 1770. We get below there, I'm shifting the short-term bearish, and the same thing for the longer-term area will be need to get back below about the 1700 area. To the upside in the Russell, we just have to use our minor reverse harmonics at this point. This is a breakdown. This was not terribly bullish on this 4-hour close when it broke down from here. So I'm going to be watching to see where we rally to and if it for another rollover play. But can't get short-term bullish until it gets above 1834. Remember, the pair trade was short the Russell along the Nasdaq. But that's going to get unwound pretty quick with earnings. With the earnings this week, which I did not show yet. Hold on. Sorry, I've been focused on trying to get stuff produced today with this backup system, and it's been really rough. 1852, 1859. Here's the earnings I'm talking about. Let's jump over to that real quick. Big week for tech. Monday starts it off with Infosys, which is minor. Squarespace minor. So Monday morning, not much. But starting with the afternoon, we got Logitech, which could be interesting. It's not a major player, but it could be interesting if they miss or guide lower. It could be a sign of things to come. Before the open on Tuesday, I am watching a consumer staple, Coca-Cola, and see how inflation plays in that. And paying attention to McDonald's to see the consumer aspect. But then you start getting after the close, and UPS, of course, because of the delivery aspect. But after the close, Alphabet and Microsoft, biggie, and Visa, even though not tech, that's directly related to consumer spending and how strong the consumer is. So that's going to be big. So starting Tuesday afternoon is going to be big. Wednesday, Shopify and Spotify will sort of be interesting, but that's minor. But after, we got Meta, Qualcomm, Ford's minor, but it's a sign with the things with the consumer possibly pulling back and to see how their supply chain issues are. But then Thursday after the close, Apple, Amazon, Intel. Very big day on Thursday, and that's after the Fed meeting. Remember, Fed meeting Wednesday afternoon. Then Friday, we got oil. We got oil starting, so Friday's interesting for any oil plays, and I'm going to watch Colgate Palmolive in here and Procter & Gamble. So super busy earnings week. Hey, Christoph, glad you could still join us. DAX triggered the double bottom. Going to be interesting to see if it's hit the first target for the stop raise. The stop raise now is on a close below 12,768. Or walk away is 12,634. Other than that, going to be watching to see if we get that pullback closer back to the breakout area with this. Now remember, it still is against the weekly rotation zone, so it was the slightly lower probability. But I'm going to see if we can get that push into the weekly rotation zone, especially with weekly cycles not yet topping. Daily cycles have topped, but have so far been working off their topping condition by a choppy, slight pullback move. So even on a pullback to the prior breakdown zone does not invalidate anything for me. Crude, hitting that first target, still watching on a closing basis because of that stop raise on a closing below about 94.50. This head and shoulders is over. after just hitting the first target. So we'll keep an eye on that. Other than that, it's sit on the hands. By the way, this is not a double pattern right there. Hey, options 22, better late than never. You can get my thoughts in the beginning by going to watch the replay. But crude cycle, 4-hour cycles at the bottom, daily cycles not yet at the bottom. But this is very key because we start getting a close below the 200. This is what I'm really watching. We've tested it for the first time on the 14th of July. Tested again 18th, but neither closed below it. I'm now watching. This is a very key area because a close below it. Then if we do the weekly close below 92.93, I'm going into bearish mode in crude for the time being. And if we do close below crude on the 200, that would be the first close below it since the last time it closed was a close below it was the December 20th of last year, before the pretty strong breakout play. So that's why I'm keeping an eye on crude very close, and you can watch the weekly sector overview. I give my thoughts on the energy sector. Natural gas still running on up. The next area I'm watching is this 855 to about 860 area. Gold watching for that long-term bottom, but as I said on Friday, watching for the pullback play first to assess that pullback. And gold has been stronger than silver or copper, so gold is the first one I am watching. Although you start breaking above this is very sloppy. This is a very sloppy double on the daily because of this flat area. I'm going to map it out. And you have this big pausing area. But that, and I'd really be focusing on, with all these highs right here in the rotation zone, I'd be focusing on 1959. That just helps me tune a potential target area. I don't know if I'd play this off the first thing with cycles at the top though. And weekly, we don't have a strong bottoming signal. We have weekly at the bottom. Copper will probably get a bounce, but I'm watching starting for with cycles at the top on the daily, at the bottom on the weekly, still watching for another pullback play and then a more significant bottom putting in out of this oversold condition, but not being aggressive there just yet. We got the right-hand shoulder pretty much put in on the 10-year notes coming up to touch this potential neckline. And so I'm now watching for the close above this neckline, which would essentially be the close above Friday's high, which was 120.11. A close below there, above there, would pretty much trigger the double. I mean, the head and shoulders pattern, which would give us 123.19, 125.07, 126.28, which would be a significant potential rally in the notes. So yields would continue to drop there. My key support now is coming back at 128.28. Dollar index, sort of either the breakdown or breakout play. Breakout play won't happen until we get above 107.18. Breakdown play below Friday's lows at 105.99. Then I'm playing for the breakdown back to the weekly rotation zone coming in about 105.40 to potentially 104.60. Watching it for another rotation back up there, especially since weekly cycles are at the top and daily cycles are at the bottom. So we might get a bounce here, and then the next rollover in daily cycles are going to bring it back even farther, and we might get a more significant topping pattern. We'll take a look at the VIX tomorrow morning. Euro. If Euro breaks above about 102.80, then there's a really nice potential play, which would then be dollar index pulling back more. But we have this breakdown zone. If Euro breaks above, even on intraday basis, about 102.80, then closes above there on the daily basis, then the next target is 103.80 into this clear path move to the breakdown zone. The only hesitancy is cycles are at the top on the daily and at the bottom on the weekly, so we might still get a little pullback before the next push up. If we can get the cycles on the euro to pull back to the bottom, with the weekly still turning up, there could be a stronger bottoming signal in there. Bitcoin still sitting in this channel. Need to get a close back above about 23.4 before, again, target is 25,000. 25,000. Again, this is just a recovery move before the next potential rollover play. And it's hit that weekly rotation zone. Cycle's now getting closer to the top on the weekly and closer to the bottom on the daily. So we could easily see one more push higher before those weekly cycles roll over. Let's just take a look at the cues. Again, the cues, we have a potential head and shoulder here. So we start breaking down below 300 especially, then I'm targeting a pullback to 296.50 and then 294.53, 292.56. But I'm really focused on this 296.50 with that prior breakout area. So that's what I'm focused on to the downside. Back to the upside, we got the resistance area where you could draw your harmonics on here if you want, your short term. But here's where I'm focusing the 50% harmonic with this prior area. So on any rally, this is my key area right in here. You see that we actually use that level for the projection of the harmonics that topped out at 308.60. We had 308.60. The high was 308.55. Then pulling back. So if we do roll over, that's my downside targets. To the upside, if we follow through either tomorrow or Thursday, still 304.35 as long as we don't trigger that this head and shoulders. We could easily still roll up here before rolling down. But if we roll down and trigger this, then I'm watching for the bigger pullback in the cues. By the way, if you do take out 308.60, your next major target is 312.97 or roughly 312.97, 313. Sun's angry, Coco. The sun's angry. Will gas company earnings this week affect crude? No. Crude affects, no. They're going to trade off their earnings separate from crude. Now, if crude starts pulling back, breaking below some of those key levels, it's not going to affect their earnings because their earnings are already there. It's going to probably affect their guidance and the way people are going to play it moving forward. So I'd really watch if those longer terms, Andrea, if we start jumping back to crude real quick, if we start breaking below that 200-day, going into the earnings. Now, the earnings are going to be what they are, and they should easily beat on earnings. But the reaction might be more muted if crude's breaking down. Why? Because crude's pulling back, and we'll get a pullback in energy, which means their potential future earnings aren't as strong, so people will start front-running that to the downside. So you're going to have a mixed message. But if a company misses in the oil sector and oil breaks down, it could be pretty bad for them. You are welcome. Hey, Ted, happy Sunday. Let's take a look at the spiders. Spiders also. I'm watching for this. That was that little minor double that's off the table. Now what I'm watching for is a more significant, if we break down, again, the more significant potential head and shoulders. All right, we don't have a fully formed right shoulder yet, so this is just something I'm keeping an eye on. Pretty similar analysis to the cues. Let me just anchor these correctly. My 50% area is right in here, right at this breakdown zone. So on any rally, this is my target, about 396.50. And then I'll watch for another rollover play. We start getting some closes above that, then it's playable to the upside. At this point, I have to go with some different harmonics. And I'm going with the most recent harmonics from this swing. And that gives me, so if it holds up and we continue to rally like TomTom stock says 365 was the bottom, long term, not just short term. If we really start breaking above 396.50 area, then I'm targeting back in the 400 range, and then we have next clusters 403.50, then 407.46. You're gonna have trouble with really good internet in Antarctica, Coco. And if we roll over and break down and have this shoulder, then my first major I'm watching is this 389 to 390 area. Hey, Michael. Late to the party here. Seems like many stocks are at a make or break point this week. Should be good and interesting. That is correct. This is the major week. This should define it for the next little while. It is going to be very interesting. Very, very interesting. And there's no reason. I mean, if it shrugs off everything and if companies beat and then don't guide lower, could we still see higher prices? Yes, we could. That's why I said if you're late, you should watch my comments in the beginning of when I turn minorly bearish, more bearish than majorly bearish. That's going to be your telltale signs. Can I peek at Walmart? Yes, I can peek at Walmart. Walmart, and I'm actually putting this back now that we knew that bottom was into the conservative targets, but it triggered a double bottom pattern. So Walmart still on any pullbacks. Your key support coming in about 129.85 to about 128.50. You don't want, in the short-term basis, you don't want to see a close back below the daily rotation zone. Even if this gap fills, that would be about 127.60. But it's playable with this. This triggered this double bottom. And your targets, the upside, let me pull this line off, are 135.87, 136.64, which is pretty major because that's a key harmonic and right in front of the 200 simple. So those are your primary targets. Your secondary target, 141.83. And then if you're trying to play it longer term, you have a gap up here to 148.21. But those are the plays. I would not be surprised with cycles at the top on the daily to see and the weekly to see a pullback, especially after a multi-week run hitting the other side of the weekly rotation zone and this breakdown level. However, that would be watching. So if you weren't already in this, I'd be watching for a pullback and then a multi-day pullback and then a rotation back up on Walmart. Since of probabilities favor more upside. And we did tap the other side of the weekly. So again, you normally get another reaction. And then if it's going to continue, the strong push higher again. Earnings on this. Earnings aren't till 16th of August, so we have plenty of time before earnings, and a lot of times this will make a run into earnings. So even if we get a pullback this week, as long as we don't get some key closes really dropping below these areas. I have those backwards. Hold on. As long as you don't get the key closes below some of these areas, and what would invalidate the double would be a close below 122, roughly 122. Sorry, getting a little thirsty there. Hold on, let me just peek at Tesla, then I'll get to something else. Tesla on that massive gamma ramp this week. Still watching for a rollover play in that, but your key support coming in at right now, 776, then back to 755. I can't get bearish though until we break down on the shorter term basis, especially below about 683. Other than that, it's just a short term pullback play after that massive gamma squeeze. I'd be careful to the upside now with daily and weekly cycles both at the top. If you're trying to play that to the long side, this would not be the point to chase it. It would be on a pullback play. Remember, oil earnings on Friday. I forgot to. This is a valid triggered double. Okay, still has not hit the first target, 90.51, then 92.02. So those are your two targets you're focused on if you're playing this to the long side. That would be stop raise. 92.02 would be profits because the third final target is away unless you're trying to play something into earnings. Not surprising to see the pause with the daily cycles and oil pulling back, but there still could be an earnings play. As you know, sometimes I say there's just no play. This one, there is a play still because it's already a triggered double. Now, if the double completes with the first and second targets before earnings, that is off. So this is going to be interesting to see. And what you don't want to see for that double now at this point is a close back below 84 bucks. A close below 84 bucks, the pattern's over. It's off the table. It's a failed pattern, and the daily cycles at the top and weekly cycles at the bottom. So again, we could see a slight little pullback before another push higher into earnings. But if I had to bet with this, I'd be betting for, as long as this pattern doesn't complete in earnings, I'd be betting for a move up and then a potential rollover play. What was the other thing? Roku earnings also this week. And Roku is just still in long-term sell mode. In a big horizontal pattern, running back down, still in long-term sell mode. So I actually wouldn't do anything pre-earnings just because there's just not a lot of probabilities in a channel like this. You can look at the options and look at these straddles on the options to roughly get the range that it could break out for. But what I would prefer is, even if we had a gap up on earnings, for then watching for a gap sell play and then potentially breaking back down longer term. So yeah, I guess I don't know how you do a pairs trade XOM Roku because they're not. That's not technically a pairs trade because they're not in anywhere the same industry, and you want to pair up stuff roughly in the same industry. You'd just be playing a poor Roku earnings or poor tech strong oil with your play there. If you're going to do an XOM Roku pair. Will Snap ever come back? Will it ever come back? I have no idea if it will ever come back. I'm betting it hits back to $5 over the next few months. I mean, so that's key. I mean, here's one of your problems. Again, what's your PE? It's not there yet, and it's horrible. And you're not, with tech the way it is now, you're not, even if this thing gets destroyed, you're not into major takeover plays right now with tech companies cutting back. Unless the Fed starts easing massively and makes cheap money again, then Snap would probably be a takeover candidate by somebody. But not in the short term. I wouldn't count any plays to the upside. Would just be running. You have this gap fill play, but I'd actually be running to watch prior support becoming resistance. And then a potential another rollover play, especially when the Nasdaq starts its next major move down. So no. What are your indicators for a long-term bottom? Does capitulation have to happen for a long-term bottom? No. Capitulation can happen, and capitulation can happen without a long-term bottom, remember. Capitulation can make a short to medium-term bottom. More so medium-term. Capitulation generally does not happen for a long-term bottom in a significant bear market. It generally peters out. and you get a shift in the macro. Okay, see, we don't have a shift in the macro yet, and you get go through your earnings compression. We haven't had the earnings compression. It could be starting. So that's where we get capitulation can generally happen, and you can get multiple capitulation moves in a long-term bear market. We had a couple capitulation moves back in the dot-com bust before it just petered out. And then we got to really good valuations again. And the stocks that survived were bargains, and you could scoop them up. Hey, Rich, did you put that up after I said it would go to $5? Look where the harmonic is. It's right here. And that'll be the round trip move also. That'll be the round trip move from the lows in December. You're going to see us back down here. There's no bottom yet. Look at this. Sideways correction into your weekly rotation zone. Another perfect example of a sideways correction into a weekly rotation zone. I think I talked about that the other day. Yeah, Snap's dead for a while. Selling into it. Oxy Patrol. Oh, we'll put tank. Here's your play on Oxy. I already have it on the chart. You break below this neckline. I just break below about 54.41. You break below there. We don't have this neckline broken yet. You break below there, it triggers this head and shoulders on Oxy. As a tank, 45.94, 40.94, and 35.32, which takes it back to the prior breakout zone. This is where, if you're already long, see, this is getting long in the teeth now. Cycles are getting to the closer on the weekly to the top, rolling over on the daily. Could it see another try to push higher? I couldn't get bullish on Oxy unless I got a daily close back above about 66.65. So if you're not already in it, this is running out of upside momentum. And I'm watching for the pullback play now. Would I be shorting this? Not. The only short play would be with options. Why would it only be with options? Because could there still be a surprise move to the upside? Look, if we get some major hurricane form out of nowhere that's going to hit the Gulf, oil can take a big pop. If something weird happens, so we got the Russia-Ukraine situation, something can still happen there. We could get upside surprises still in oil. So I would not be playing this breakdown by shorting shares. It would just be an options play with limited risk. Or it's watching for these levels to come in for another turnaround play back to the upside. If Putin pushed the nuclear button, the market will find a bottom. Well, I think if the markets reopen, there'll be a bottom eventually. You're bullish on crude oil. Warren Buffett brought a lot of OXY. Yeah, Warren Buffett, he's a great investor, but his timing could be interesting. Again, this might never trigger. So if you're already long, you have a great place, because if this triggers, you can take a stop, lock in profits, and then look to re-enter on lower prices. If it keeps going up, then you keep trading with the trend. As long as oil, we have that crude double still in play. So could this still go up more? Yeah. But again, if crude triggers this weekly double top, or on the daily starts getting close below the daily 200, we could start seeing a bigger pullback in crude. Now there will be, I bet you we will see a surprise upside run I bet you we have some kind of hurricane thing happen in the Gulf at some point, but that could go up until the end of September. But I can't trade off something that is not there yet. All right. That's where we sit. I'm going to get back to getting that weekly sector overview posted. Thank you for tuning in. Again, I will be live tomorrow morning again. for the live stream. And make sure you do check out the sector overview and let me know your thoughts. I will talk to everyone later. Thanks for showing up live. You are welcome, Anissa. You are welcome, Josh. Again, this is going to be a very interesting week. We're still in tactical trading mode. I actually can't get back to where we're in long-term trading mode with a long-term signal. That'll be so much easier. You are welcome, Paul. Until then, have a wonderful evening, everybody. I'll talk to you later. Oh, hey, Patrick. Yeah, I'll get through it. I looked at a computer today, so I'm looking to put some stuff in place very shortly. Hold on. I gotta look at this. I'm gonna hold you to this, Tom. 540 by Angier. All right. I'm actually gonna put a note. If you show up here, I will give you Tom stock. Year end price target 540. Where'd it go? Where'd it go? Hold on. Oh, there it is. There it is. Well, I want to move it. There we go. Look at this. And I got a harmonic at 545, but I doubt that's going to hit. Actually, I don't have that target, but we're putting up your stuff, Tom. There you go. It's on the charts. Elliott Wave 5. See ya, Rich. Maybe end of 20. I'm more in alignment with Rich. I need a long-term buy before we could get to 540. That's what would be that percent? I'm actually curious. Hold on. I want to know what that percent rally would be from where we are. We'll just do it from where we are. I want to know what percent gain that would be. All right. No, come on. 540. Let's see, 530. That's close enough. That would be from where we sit now a 37% rally in 6 months. Not going to happen. Not going to happen, but it's up there. Maybe Tom is for. All right, if you're right, you have to let us know if you're from the future. Yeah, that's fine. CPI cools down. Fine, it cools down the next report to 7. Their target is still 2. You know, if they pivot and cut too early, we'll see a repeat of the 70s, which inflation cooled, and then it went through the roof again. Because if it gets embedded in a cycle wage, then we're in trouble. Okay, and if they could say we're slowing rate hikes. They could even come out this meeting and say we're targeting 50 basis points or 25 for September, and then wait and see, and you could get even a little more rally off of that. But they're not pivoting to a cut. And they're going to say they're data dependent. There's no way they can pivot to a cut with CPI in the 7s, even in the 6s. They can't rely on, and you still, if we're going into a recession, you still have earnings compression. There's lots of things, and even inflation pulls back. Last print, 9.1. Let's say next print it printed 7. Fine, that's a drop. That's a nice drop, but that's nowhere near 2%. And remember, we have to have deflation or flat inflation for an extended period of time to get it back to 2%. So that's where, yes, if they come out and say, yeah, maybe September we're at a 25 basis point and then we're going to reevaluate, could the market, yeah, could continue on a rally. Is that a rally to 540? Wow. All right. With that, thank you for though putting it in there. And at some other point, we'll address your stocks always go up. Stocks from decent valuations in the long term tend to go up. Yes, that is a true statement. Stocks gravitate to the up over time from good valuations. From historical high valuations, they can pull back more than you think. And not every company goes up and not every stock goes up. For example, Cisco, people still underwater from the dot-com area, and Cisco hasn't gone away, and Cisco's a very good company. It was at outrageous valuations, and it's still not exceeded its dot-com highs where a lot of people still own it. All right, with that, now I'm going goodbye. Talk to everyone later. Thanks for the great conversation. Again, thank you everybody for being here. And just because I don't agree with you doesn't mean you're not a valued member of this community. I'll talk to everyone later. Bye for now.